Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another Financial Freedom Friday. And today we're going to pose the question, can you beat your financial advisor's results that they're delivering to you? And I think the answer is going to surprise you. So why don't you hang on today and we'll show you what that answer is.
Mufasa, you know we finally here, right?
Well,
It's Friday then, it's Saturday, Sunday, what? It's Friday then, it's Saturday, Sunday, what? It's Friday again, it's Saturday, Sunday. Let's go, let's go, what, hey, hey, no you did.
But first, remember, none of this is tax, legal, financial, investment advice. It's your buddy G Dinero helping you to increase your financial literacy so that you can put you and your family on that path to financial freedom. And if you'd like to see more content like this, be sure to like this channel. Make sure you subscribe so that you see more of these videos like this, not just from me, but from other content creators here on YouTube. This is the second disclaimer today. I'm putting this one in because, number one, past performance does not guarantee future results. Number two, any investing, trading, it involves inherent risks. Number three, you're responsible for your ultimate results. And number four, I've spent a ton of time mastering my craft over these last 4 years, but I've been investing for over 35 years. So there is an advantage to developing the skill, developing the knowledge. That's why I'm always pushing my courses. I'm pushing them so that you work on your skills, your knowledge, so that you can be more well prepared to take on the markets that are out there. So here's the question that I posed to myself. Could you do better than a financial advisor? See, I've been with a financial advisor most of my adult life, right? My mom had a financial advisor. She told me to save my money and give them my money and they would invest it for me. And then I moved on after my mom passed away, I moved on to a different financial advisor who since then he passed away and I've moved on to another financial advisor. So I've moved from one person to another along the way while I was busy out there working my butt off to try to generate the cash to be able to put into the investments, right? And just left it to them to take care of. And then I realized when I look back at the return that I was getting, it was averaging around 6, 7, 8% on good years, 10 to 12. Bad years, I might have lost 1% or 2, but all the while paying fees and wondering to myself, can I just do this better, especially with my knowledge of the markets, my knowledge of technical analysis, TradingView, etc. And the short answer, as you see there on the right-hand side of the screen, is yes. So this was the move that I made to a self-directed IRA and Roth IRA, a traditional IRA and Roth IRA. And this move has taken place over the last few years. And I'll kind of break it down for you in the parts that it happened. So first of all, in my traditional IRA, the first move that I made was about 4.6% of the total that I moved over. I'm not giving you guys the dollar amounts today. That part's not important. I'm not going to dox myself like that here on YouTube. But just realize if I moved over 100% of this traditional IRA, I moved over 4.6% of it on December 20th, 2021. That was my little test to see how could I do with it. By the way, that exact day is the day that the markets topped and pretty much every tech stock, Bitcoin related stock, anything risk on started selling off because that's right when they started increasing the interest rate. So the absolute worst time to have transferred money over and to go, whole hog into a very tech, AI, and Bitcoin driven portfolio. The second portion was 28.5%. That came over in August of 2023. So you notice a little lull there, like almost 2 years. So I really say that I've been doing this experiment since August of 2023. That little bit that I moved over, that call it 5%, it's negligible in the bigger picture, okay? So really I've been doing this since August 21st of 23. I moved over another 29.5%. So say another 1/3 on November 13th of 23. And then I moved over another 1/3 on January 3rd of 2024. So that should add up to close to 100%, somewhere thereabouts. I have also added cash since January of 2022, and that amounts to about 8.9% of the overall total of what was moved over. So let's say $10,000 was moved over, $460 was moved over first, then $2,850, et cetera, and I added $10,000, I added $890 to the mix along the way, right? For every $10,000. That's a way to look at this graph. In the Roth, I started it on April 2nd, 2024. I started this one after the fact. Once I kind of moved a bunch of the traditional over, I'm like, okay, let's tackle the Roth. So I moved over 37.5%. And then I moved over the rest on November 26, 2024. So just about 6 months ago now, maybe a little over 6 months. So the Roth hasn't even had very much time for it to appreciate or to differentiate from the results that the financial advisor is getting. So the grand total moved, including cash since 2021. 3.5% was moved in 2021. 1.5% in 2022. That's just the cash that I added that year. 46% of it in late 2023, which was the moved amount plus cash added, and 32% in early 2024, which was the moved amount, and then 17% in late 2024. So let's take a look. The majority was moved over or added over the past 12 to 18 months. So that's the part I want to really stress. Yes, the very first little bit, 5% of just the traditional was moved over back in 2021. Everything else has been added since August of 23, right? So not even 2 years yet. That's less time to show a difference versus the advisor's performance. So I didn't have very much time to differentiate myself from the results that the advisor would be getting. That's the part I want to keep stressing here to show you what can be done in a very short period of time with the right types of moves in the results, or in the market. So here are the results. Had I left the money with my financial advisor, I would have received a 15.02% total return since I've been moving the money over. So had I just left it with him, I'd have 15.02% more money in that IRA, in those two IRAs. But by moving the money over and investing myself, I've shown a 182.43% total return. Guys, 182.43% return. And yes, this is with my retirement, the thing that you're supposed to be very conservative with. But my thought was, why be conservative with it? I'm still working. I can't retire yet anyway. And if I'm aggressive with this, maybe I can stop working sooner. Okay, that's the point I want to get across to you. So a massive, massive return. It's a staggering 12.15x. So over 12 times better than the results in just the last couple of years. And again, that's my return versus the advisor's return. So to put it a different way, and again, I'm not going to dox myself. I'm not going to tell you the exact dollars amounts that were moved over. This will give you an idea so you can categorize yourself into one of these categories. Maybe your IRAs or your 401k is only $10,000. All right, no problem. At least you've gotten started. That's the important part. Start somewhere. Get off zero. If you want to see something about getting started, make sure you check out my video where I discuss that in detail, getting started and getting off of zero, as they say. But to put it differently, for the results that I was able to achieve with this little science experiment over the last couple of years, for every $10,000, The advisor with a 15.02% return would have turned $10,000 into $11,502. Better than doing nothing with the money, right? Absolutely. G. Dinero's return with 182.43%, $28,243. So for every 10 grand you had, you have almost 3 times more. Almost. Just shy of 3 times more in realistically less than 2 years. And to put it a different way, for every $100,000, the advisor with a 15% return would have generated $115,020. And the return that I got, the 182% return, would have been a $282,000 at the end of the time period. For every $500,000, because some of you have decent sized retirement accounts. Realize the advisor turned it from $500,000 to $575,000. G. Dinero's result to $1.4 million. I don't know about you, but I'd much rather have $1.4 million than $575,000. And then for every $1 million that you transfer over, the advisor, you'd have $1.15 million. It's awesome. I mean, you're up $150,000 in that case in just a couple of years, right? Think about that. In just a couple of years, you're up $150,000. With my results, you turned $1 million into almost $3 million. So the results speak for themselves, but there's a catch. The financial advisor charges a fee. 1.25%, that's not unusual, right? Fees vary. I know there's some advisors that you pay per trade. There's some advisors that you pay a flat 0.5% or 0.75% or 1%. I know people that are paying 2 and 2.5% because they're investing more with like a hedge fund or somebody that deals with ultra high net worth individuals, right? So they're taking a big cut off of what they're doing for these folks, right? This does not include the fees that the actual funds themselves are charging. This is just the advisor, right? So think about that. If you include the fees, so on $100,000 accounting for the advisor's fees, their 15% return realistically turns into a 10.65% return because in the first year on $100,000, they took off 1.25%. They took off $1,250 and kept it for themselves. And in the second year, they kept another $1,250 for themselves. And remember, I started this back in 2021, even though I only moved a little bit in 2021. So for then the next 2 years, another $2,500. That's $10,000 off your overall return. So again, for 3.5 years at $1,250 a year, the way I calculated that is $100,000 times 1.25% management fee equals $4,375 in fees that went to them and did not stay in your account that could have compounded all this time. With mine, with my total return, $282,430. And remember, I did not pay a financial advisor over that time. Now, I did pay for tools, right? I paid for Invest Answers tools. I paid for TradingView. But I didn't have to give the money to somebody else. I put it in and invested it in myself and turned around and kept using that to generate these types of outsized returns that you see right here. Again, if you want to look at it with $1 million, the advisor, you would end up paying over $43,000 in fees over the 3.5 year period, which that's $43,750 less that you'd have in your account. You turned your account from $1 million to 1.106. Again, a 10.65% return. G. Dinero, 182.43% return. You turned $1 million into $2.824 million. So accounting for fees, the advisor is a 10.65% total return. By moving the money and investing myself, that's a 182.43% total return. And that's an even more staggering 17.13x return, not 12.15, 17 times better result by investing it myself by learning the skills, by understanding how to invest, by learning how to trade. I don't trade a ton. Yeah, with options I do, but not necessarily with shares. It's not like I'm buying and selling shares every day. I'm just making sure I go with the ebb and flow of the market, right? So how did I do it? I studied. This is the part where I put in the disclaimer the second time. This is why I put it in there. I studied at least 3 to 5 times per week, every single week. I treated it like it was a job, right? If this is going to keep me from having to go back and go get another job and I can, quote, retire, why not go ahead and go all in, right? I studied on YouTube. I followed channels like Invest Answers. James over at Invest Answers, the guy is brilliant. He literally changed my way of looking at options trading in particular. Anthony Pompliano has a wonderful view of the bigger macro picture and especially how Bitcoin relates to that bigger macro picture. What Bitcoin did, that's Robert Breedlove, right? That's Peter McCormick originally started it, and now it goes on with Danny at What Bitcoin Did. Creative planning. Charlie Bilello over there is incredible. Natalie Brunell, she brings on some of the top thought leaders in all of the cryptocurrency and blockchain space. Mark Moss, who paints it like it is. Sometimes it's a bleak picture when he talks about the fourth turnings and taught me how to look at different cycles colliding and what happens when those things do. Robert Breedlove, who really has a thing that is What is Money? He has a whole podcast called What is Money? And it made me understand more about what money truly is. Project Finance, there's a guy, Chris, over there, and that's where I learned options originally, was watching his original video. I think it has 4 or 6 million views now. Absolutely brilliant. He's another bald dude just like me, and he laid it out in a way that it made sense to me, and I just went out and made a bunch of mistakes until I learned how to do it. I joined Invest Answers Patreon community. It was the best $10 a month I ever spent in my life, to be around like-minded people and to hear the lessons over and over and over again coming through from Invest Answers himself. I read Substacks like Anthony Pompliano's Substack, James Levish's. The guy's just a beast. He's incredible. He's so smart. James Check from Check on Chain, or he goes by Checkmate on X. These guys are telling it like it is. They're not sugarcoating it like the TradFi guys or traditional finance guys do. They're not putting a spin on it like the media does. They're just telling you real world what's going on out there. I mastered TradingView and technical analysis. You have to understand what the charts are saying so that you can eventually take your emotions out of it. I mastered trading options. Options are ways of being able to hedge your portfolio, to hedge your downside risk, to go ahead and sell the future and get some income now that you can reinvest into other things before they go up. I learned how to control my emotions. Guys, that was the hardest part for me. If you want to know what's the absolute hardest thing for the average investor, it's that one right there. Learning to control your emotions. Honest to goodness, about 5% of all the people I've ever worked with know how to. 5. That's it. The other 95%, they'll do all the other steps that you see above that last line there, learning to control their emotions. And the very last one gets them every time, because when the proverbial poop hits the fan, they don't know what to do. They panic. They freak out. They forget about all this training they've been doing for months or years, and they throw it all out the window and they fall victim to the fear that's in the market and they sell, or the greed that's in the market and they buy, which means they're buying the top. Here's a pro tip. When everybody is fearful and they're talking about recessions and they're talking about the end of the world, it's probably a good time to buy. When everybody is greedy and they're trying to pick out what color Lambo they're going to buy, or where their next incredible trip is going to go, or how many more multiples above a 10x they're going to make, probably a good time to sell and not buy then. That's it. Fear, buy. Greed, sell. Do the opposite of what the masses do, and you'll win every time. And I treated this like a university. Of course, I had to put my favorite university there, the University of Florida. Go Gators, Natty champs in basketball. You guys that have been watching my channel know that. But I treated it like spending 4 years getting a degree. It cost me significantly less money than going and getting a degree, but I spent the same amount of time on it and I treated it the same way. Like I was in university getting a university degree. I did start, again, that's the caveat. I had already started with about 30 years of investing experience when I buckled down 4 or 5 years ago and dug into this whole hog and wanted to make a career out of it, basically. So here's the thing, guys. You can do it too, but you got to take it seriously. You've got to treat it like a job and not a hobby. Why? Because hobbies, like cycling for me. Cycling for me is a hobby. I pay money. I got to pay money to go do that hobby. Jobs, if you treat this like a job, you'll make money. Hobbies cost you money. Jobs make you money. Which one do you want to do? Again, second time I'm putting this disclaimer up, past performance does not guarantee future results. All investing and trading involves inherent risks. You are responsible for your ultimate results. And I spent a ton of time mastering this craft, not just the last 4 years, but the 30 years that I already had going into it. If you want to learn how to do this yourself, make sure you book a course with me or an individual appointment, right? I have courses on TradingView and technical analysis to teach you how to read the charts. I would suggest starting there. If that appeals to you and you want to move on to learning how to do options, take my Understanding Options class. If you want to go on to application of these things, that may be the time then for you to go ahead and book an individual appointment with me, all at gdinerocoaching.com. Guys, it's been a fun one today. Make sure you like, subscribe, comment below. Did you like this video? Did you like the format of it? Did you like the pace? Did you like the content, right? What do you like best about it? What could I do better? And remember, this is G Dinero. I'm your buddy. None of this is financial advice. It's friendly advice. I'm here to help you increase your financial literacy, to help put you and your family on that path to financial freedom. Have a wonderful weekend, guys, and enjoy your Friday. Take care.